Okay, there's another lesson on the quarter point theory, and this is on a different pair. I was asked to explain explain the exact same thing that I explained on the quarter point theory. Like, obviously, I always use GPUSD. Someone asked me to use a different currency pair this time, so I'm currently going to use AUDUSD. As you can see with AUDUSD, the highest we've had since 2014, basically, was this level right here. That's the highest we've had, right? And then the lowest we've had since 2014 was here. I will not consider this level here because this was forced in by, what do you call this, the whole COVID, the whole pandemic. This was forced in. So if this whole COVID pandemic didn't happen, it would have probably reversed from this section and probably went back up. So during the whole COVID thing, it actually forced it to break this consolidation that it's been in since 2014. So besides COVID, it wouldn't have actually broke the level. It would have probably bounced here and then pushed back up. As you can see, it did push back into the consolidation after some time. So now looking at this pair, which is AUDUSD, as you can see, the theory remains the same. I only take my trades only on the black lines, right? Which is the quarter point theory, or the theory on how the banks only move price at whole numbers and versus cheat codes. Basically, if you probably search it on YouTube, it'll be called cheat codes or something like that. But for me, it's basically called the quarter point theory. So if you want the original searching to search for it or to understand it more, you can easily search on YouTube the quarter point theory. So now looking at AUDUSD, as you can see, since 2014, it's been trading between this range, meaning every time we touch the low, you're buying, every time we touch the high, you're selling. And as you can see, it did respect that recently in 2020, basically around November, December, it did actually respect that 80,000 level and dropped because it usually reverses at those levels. Do you understand? So now when we go into a smaller time frame, the daily time frame, as you can see, we come from this selling trend right here. We had this selling trend going on right here, but as you can see, it did break above a bit from the selling trend. We had this selling trend going on right here. So all my trades, basically, out of only taking my trades at these whole numbers, as you can see here, the recent buy that did come on the 13th of August, basically could avoid it from that 71,000 level. And maybe, yeah, I would have taken my take profit at 72,000 or 73,000. But usually what I do is take like 20 entries. Then maybe if it touches this on, I'll close 5, and then touches this on, I'll close 5. If it did continue, close the next 5, then I'll be left with 5 entries as it got to this level right here. But even though it did reverse back, it did only start to buy again from the 72,000 level, then continue to push up. As you can see, most of the reversals always play out on those whole numbers, and you can see that it's been playing out that like that even years before that. Sorry guys, it's been playing out like that since. Like, as you can see, all the reversals and all these small movements played out on the whole numbers, always reversing at these whole numbers. You can see it's always been the same. It hasn't changed since the time when it started. As you can see, most reversals always appear at the whole numbers, at these black lines, the quarter point theory, the theory on how the banks always reverse markets or move markets only at whole numbers, or react in the market at whole numbers. So you can see the reactions that we've been having all along always played out on those levels. So that's why I say that I'll only take my trades at these levels. I'll never take my trades anywhere else. Always take my trades at these levels, and understanding how and where I'm gonna go. I'm gonna be looking at it through the daily time frame, obviously drawing my trends to see, like, obviously from this point here before the whole breakthrough, right? If it actually does break through, because it could break back in and then continue to drop, but we'll see what happens. But as you can see, before that, anything that was below, any touch, or after every buy, you could have just sold because we're trapped below this trend line. So every buy under any price level, you could have just continued to sell. Like you see, That's 76,000 sell, 75,000 sell, 74,000 sell. You see, like all the reversals, but there was no reversal here. It just dropped all the way to 71,000. And then from here you could have chose to buy it, because what it does is that after every new low it creates in that year or in that period of time, you buy it from that. So basically you can see it's basically moving like steps. You can see there's the impulse, correction, right? Then we have, sorry guys, this whole thing is just, yeah. Okay, you can see again we had the correction, then the impulse down, and then the correction again. We had the correction, and then we had the impulse down again from here. But this time there was no correction. It just broke above and went back to that level, which it corrected here basically, and then hit that level, then pushed back down, and then never actually went to make a new low. It reversed right then continued to push up, but you would have seen that it created a whole W pattern, and there was obviously a smaller W pattern on a smaller time frame, but you'd have seen the bigger overall W pattern. Then you could have just taken your buy there at 72,000 level there, and then continue to buy. If it does break back through, if it does break below again, you know we're gonna continue to go down, because right now the 75,000 level, it closed here, but you know there's false breakouts, so it could break back through. But if it does go back above 75,000, it might go and hit 76,000. If it breaks 76,000, it'll probably stop here at 78,000 and maybe probably come back down again, because there's so many reversals at that 78,000 level. As you can see, a lot of touches at the 78,000 level made the market react a lot basically. So looking at the market, you can just look at it in that format. And yeah, that's basically it on the quarter point theory. Even on other pairs, like I said, it's all the same. It doesn't actually change. Even if I can add the arrow signals, you'll see. Let's go custom. Sorry guys. Let's go here. Let's go here. Where is this thing? It's as you can see, also with AUDUSD, most of the reversals, what they play out on the whole numbers. Every time it gives you a signal, the signal will always be at a whole number. It will always be at a whole number. The ones that don't look like it's at a whole number, you know there's the halfway in between, but usually it plays out at the whole numbers. As you can see, that whole numbers always. Whenever you see a selling signal, just know that it's gonna play out at the whole number or the halfway number as well too. So as you can see with that, like even if you add your arrow signals even before, always played out at the whole numbers, always played out at the whole numbers, always played out at the whole numbers, which is how it works. That's basically it. So like I said again, I would only take my trades on these black levels, the quarter point theory, the theory that the banks only move the market or react at whole numbers. And you can see it actually does do that. It does only react at whole numbers. You understand? So even if you're drawing your trend lines or whatever the case is, it's still going to be the same. It will still react at whole numbers. Like even if you can draw this, you can see that sharp. It still continues to react at whole numbers. So even if you're drawing your patterns, you can see it's still going to react at the whole number. So the trend line must correspond with the level, the price level, which is the quarter point theory, or the theory that the banks move the market at whole numbers or react to the market whole numbers. And you can see even when you're drawing your trend line, when you know price, when price must break, let's just say the candlesticks must break the trend line and break price to prove that it will go into a certain direction. So with this breakout, you'd have realized even if you took a sell here, it was going in your direction. Why? Because it broke the trend and it broke the price and retested below the price and retested below the trend line, and it's obvious that's gonna continue. You understand? And that repeats a lot. Even if I can show it to you in a smaller format, there's a smaller format of it. It's still the same. There's no difference. There's really no difference. It broke the trend line, it broke the price, continuation to the downside. You understand? And you can see the patterns, the M patterns on the same price level. So basically on the same price, some price levels you're looking for M patterns, some price levels you're looking for W patterns. And then sometimes we don't get the full W. You can see here it gave us a W pattern, but the second leg is always at the price which is just a bit higher. Do you understand? So everything remains the same basically, and even if you draw in your trends, your trend lines, still remains the same. Still remains the same. As you can see, you realize here comes the buy because this was a breakout from this trend, the retest on the price and the trend line, and then the continuation to the upside. Still the same. You understand? So if it's gonna break a price level, it'll break the trend as well too. If it's not going to break the trend line and the price, it'll continue going in the direction of the trend line, basically. So that's basically how I take my trades. Thank you for watching this video.